Welcome to the week ahead for financial markets. Mike Smith with you. We've got five things we're going to look at with you. The first of these, of course, we have seen a significant rally over the last couple of weeks in the major indices. The S&P 500 hit its ninth straight day of gains on Fridays. It's undoubtedly helped by a relaxation of tariffs, by continued positive earnings. And of course, we are now, if we just look at the S&P 500, you can see here the importance of Friday's move took us over the 200 MA that you can see there. That's that red line. A little soft in Asian trading today, but we've seen this before. So are we on for number 10? Wait and see at this stage. The futures are set slightly to the downside. Of course, we have got the Fed coming up this week. Markets pricing in no rate change this week, but we're still pretty well on for a rate cut in June, around about an 85% likelihood of a rate cut in June at this stage. It's going to be interesting to see Trump's response if there is a pause this week. He's taken every chance that he's got to take a pop at the Fed chairman. Pause will give him the opportunity to do that again. One of the drivers, as I've already referenced on market rallies, is US earnings. We've got over 70% of the market reported so far, with 76% beating EPS expectations and right about mid-60s beating revenue expectations. The forward guidance uncertainty, after a little bit of market wobble when earnings season first started, we seem to be in a reasonable place. So with around about a quarter of the S&P 500 to report, most of which happened this week, at this stage, things looking good. China is obviously in focus in light of current trade negotiations with the US. At this stage, there's no solid evidence of talks planned, and so Chinese data will continue to be watched fairly closely. Last time they released a CPI, it showed a negative print. Markets don't like deflationary environments, and we are expecting the same as they report at the end of the week. Want to keep an eye on, along with anything else that comes out of that China US trade talks, of course. And finally, we are talking about oil. Oil has breached a 4-year low after OPEC has announced that they are going to increase production. Somewhat surprised the market in light of where oil is sitting now, but it does suggest that there may be more downside to come if we look at a chart. Here is the oil futures, and you can see there's that 4-year low that we put in place there. We tested it around about 3 weeks ago intraday. You can see there down, if I just bring this up a little closer, a gap down from Friday's trading, which has taken us through that level and through that March 2021 price point. More to come, as I said. Of course, you can keep abreast of everything that's going on by popping into our market updates, which run 12:30 p.m. Melbourne time every day. And of course, we do our deeper dive into something educational on Wednesday evening in our inner circle. Great to see you at either of those. And of course, we are always here to help. We're glad to assist you with whatever you need. Trade safe and see you again soon. Bye bye for now.